It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast on another weekend that has landed. Yes, it's the Real Estate Podcast all the way with our non-stop marathon of suburb by suburb, breaking down all of the numbers and the trends. We do it every morning for you, all about the Australian real estate market and how it is behaving for you. Well, it's a Saturday morning, June the 7th, and good luck out there if you are attending an auction. You might be right now be sitting around the dining room table, you and your partner, with property flyers all over the table, working out how much money you have got to spend. Fine-tune the budget, because preparation for an auction is absolutely key. And real estate at the moment seems to be on a better footing. You know, we have interest rates falling. The way that people are feeling about the property market is into that positive territory. But on the other side, we are always looking for those global shocks that might come along and interrupt the party. And then yesterday, the Musk-Trump bromance is over, well and truly. Musk, who previously appeared aligned with Trump on free speech and tech regulations, has now publicly distanced himself, going as far as yesterday implying that Trump's name appears in the Epstein files. And it's probably only going to get a whole lot worse from here. Musk, though, has got no option but to start getting real. His companies are in free fall. He's lost billions of dollars with his alignment to Trump, and then goofing around on stage with a chainsaw really didn't help him. His reputational damage is the biggest in social media history. And where it goes from here is anybody's guess. But on our Saturday morning, let's welcome in Anthony Landau, the Managing Director of Equilibria Finance. Good morning, Anthony. Welcome back to the Real Estate Breakfast. There you go. That bromance was never going to sort of last the distance, was it?
Yeah, good morning. An interesting lead-in for a Saturday morning, and yeah, never a dull moment in the US at the moment. And as you say, that was probably always heading for tears at some point.
Yeah, and more tears are probably going to come. Now, after somewhat of a subdued start to the year, Australia's housing market appears to be regaining this momentum that I'm talking about, driven largely by two recent interest rate cuts and renewed buyer confidence. Anthony, we've seen headlines pointing to shifts in median house prices across the country, but what does the data actually tell us right now? Are we seeing broad national trends emerge, or are the changes more fragmented between regions and property types? What do you think?
Yeah, median house prices have certainly been on the rise, and I'll bring it closer to what's happening now. But over the past 44 years across Australia, they've risen by more than 1,400%. So there's an interesting statistic for your Saturday morning. But across Australia now, median house price stands at $898,000. Sydney is now the most expensive by a long shot, median house price of $1.486 million, and a unit is now $860,000. The areas we've seen some really, really strong growth is Brisbane, Adelaide and Perth. In fact, Brisbane's median house price is now the second in Australia at just over $1 million. Perth's now $850,000 and even Adelaide's $882,000. So we've really seen a surge, particularly in Brisbane, Adelaide and Perth, in those median house prices. Melbourne's still strong. It's $939,000. Units do sit a little bit cheaper. As I said, Sydney's at $860,000. Melbourne's at $790,000. Brisbane's median unit price is $709,000. Really, really difficult across the country for buyers looking to get into the market.
Yeah, that's some good points. And since the onset of COVID, capital city dwelling values have undergone this significant movement that you're talking about. I mean, some markets surged, others did plateau. So just how have those values evolved over the past few years? Let's look at that and how it is continuing to shape buyer and investor behaviour right now in today's market?
Yeah, look, COVID-19 sent Australia's property market on a rollercoaster ride, from buying and selling, how we went about things, but the impact of what it did to house prices is still being felt 5 years on. That's sort of the relevance of where we are. Back 5 years ago, a lot of areas were deemed more affordable. Since that COVID-19 pandemic, combined regional areas in Australia have risen by 56%, which is quite incredible. And even capital city have seen property prices rise close to 34%. So that's very, very strong since the COVID-19 period, mainly due to strong internal migration. People were changing their behaviours. People were moving to regional areas to change how they worked and lived. There was also strong demand, and buyers were taking advantage of some of those more affordable housing prices.
Yeah, and the migration, of course, that is just going to continue for the rest of the year. We'll get to that in just a moment. We'll come back with Anthony Landau on your Saturday morning next after this.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
Oh, I was going to mention too that recently the 2025 Pippa Awards for Excellence were held in Brisbane. And a shout out here to Matthew Hughes, who keeps us so well informed about the Perth property market. He took out the Property Investment Advisor of the Year. So well done to you, Matthew. Keep on doing what you're doing there in Perth. Now, on Monday morning, when we come back after the weekend, we're going to be in Melbourne talking about a bunch of reasonably priced suburbs close to the CBD. And we've got a great conversation with a real estate agent who is from originally Lebanon and made the move to the lucky country. So that is coming up on Monday. But right now, let's go to Katrina with a comment about those younger buyers in the Gold Coast.
It used to be the boomers would come down and buy it as their retirement home, and it would be an investment until then. But now it's, that younger generation, that, Gen Zs, and they're now looking as their forever homes. And there's younger money coming in to surface where people's priorities are changing.
Now, that's something that you would have noticed, over the last few years, particularly the Gen Zs, where, somebody might make an inquiry with you on the phone. They turn up and they're looking at a luxury apartment, and you're thinking, does this person really have the money? And they turn around and say, right, let's sign the contract.
Yeah. And a lot of them, they might have getting, it could be the parents are going guarantor. Two younger people, will have a much better borrowing capacity, but they're coming up with the money and they're not batting an eyelid. It's strange in the last 6 months how much youth and how much money is coming through the younger generations that would usually be reserved for kind of low-rise walk-ups on the other side of the highway.
From the emotion of property, the economic inflation, managing your expectations, lack of stock, price growth, construction appetite, days on the market. Stay informed with us and know your property.
And it is a Real Estate Saturday. The weekend is here. Property. It's all go on our Saturday morning. I don't need to tell you that. If you are gearing yourself for leaving the house and going and having a look at property right around Australia. With me is Anthony Landau. Anthony, there's no denying the affordability in Sydney continues, doesn't it, to be a pressing concern, particularly for first home buyers, which we cover all the time. However, there are still suburbs and regions where the cost of buying is actually less than renting. So let's take a look at where those opportunities are right now and what should buyers be looking out for when they're doing this sort of weighing up rent versus the buying decision.
Yeah, there's so much at the moment around the challenge of affordability, building a deposit, repayment. There are pockets in Sydney that have been identified where it's actually cheaper to buy than rent. And the rubber hits the road with some of these in terms of the median rental value versus a weekly mortgage if you're paying a 20% deposit on a house. The specifics of these areas are Rosehill in New South Wales. The weekly mortgage repayments would be $550. Rental value is about $580 per week. Fairfield, Ultimo, Harris Park, Mascot, Regents Park and Hollywood, all these areas they've identified are actually cheaper for a first home buyer or someone looking to get into the market to pay a weekly mortgage than a rent. I guess a couple of considerations are that's based on an 80% loan to value ratio. A lot of first home buyers might be looking at taking advantage of lower deposit schemes and stuff like that. So really make sure if you're looking at one of these areas that you're really understanding your budget and your repayments compared to the rent you're paying. But it does present some opportunities for first home buyers that there are still some areas that you can jump into that are affordable that might actually be cheaper than your rental payments.
Yeah, I reckon this time next year, when you and I are talking in 2026, those areas, probably won't exist.
Yeah, they may not exist in their current format because a lot of those areas are getting fairly strong price growth because of them being more affordable for a lot of buyers.
Now, the property market began this year, 2025, with a more cautious tone, but as we're talking about this morning, with recent interest rate cuts and improving sentiment, there is this shift which is very notable to feel. I can't believe that I'm actually saying this to you this morning, Anthony, when I say, let's look at the rest of the year playing out for buyers. And the reason we're saying it is because it is June, particularly for those on the sidelines wondering if now is the time to act.
Yeah, we had a fairly subdued November, December, January in Sydney. Growth had essentially stabilised. I think now with things settling down, we've had the election. We've now had 2 interest rate cuts. So I think what we're going to see is buyers coming in from the cold, coming off the sidelines and starting to look at what they're able to do. The risk, of course, being that these rate cuts are increasing borrowing capacity. Some of the government initiatives will stimulate demand. Supply just cannot keep up one way or another. So we've looked at some pretty mouth-watering numbers this morning already in terms of growth. I sense that with some more interest rate cuts on the radar, some of the government initiatives around broadening the first home loan deposit scheme, for example, we're going to see an uplift in demand, which potentially is going to bring some more momentum to the market, and potentially it's going to bring, again, some more price rises and rate of growth increases than what we've seen at the beginning of the year.
Yeah, it's all go, no question about that in terms of the property market in 2025. I'm just sitting here thinking it's a shame that Trump isn't 20 years younger. Him and Musk could get into a charity fight. Could you imagine? Imagine how much viewing that would hold.
Yeah, it's a bit of an old school way to solve things, but it'd get plenty of eyeballs.
For sure. I'd love to be the promoter of that. All right. Great to catch up with you, Anthony. Enjoy the surf today and look forward to talking again soon.
Thanks very much. Looking forward to having the surf, and have a great weekend, everyone.
If you're a new listener, welcome. We talk to the most knowledgeable real estate experts across Australia every day from 6 a.m.
We are the largest suburb. We are around 10 kilometres from the inner city of Brisbane in the Western Corridor, and our suburb begins where Ashgrove ends, and then we go as far up as to the border of Mount Nebo. So it is a beautiful area and beautiful green spaces.
Now, you would have seen things really change over a period of time because you've been there 2 decades, 20 years in the gap. How much have you seen change in that time?
Oh, Craig, it's been dramatic. I was only saying the other day, I can remember sitting in my office 20 years ago, talking to buyers on the phone, explaining that we had substantial homes for $200,000 with very large blocks and lots of amenities. And then I can hear myself over the years increasing that. And now we're up to a very basic home being sold over $1 million here in the Gap. So it has changed a lot.
We connect you to the best real estate information across Australia. The Real Estate Podcast.